So very warm welcome and good morning to everyone. This is our usual Saturday session on the masterclass, but it's slightly different. We're joining on a Saturday morning. This is 10 o'clock, 27th of July, coming almost close to the end of the month. And the Nifty gave a stellar move yesterday to hit a new life high. We're going to talk about the Nifty, Bank Nifty, rest of the sectors, and side by side we're going to check the RRG graphs as well. So quickly start with the Nifty. The weekly chart is fine in terms of our trend indicators, supreme in terms of our momentum indicators, hike and ashy, due to a 3-4 day sell-off and a 1-day sharp bounce back has led to a what we call as a red HAGB. This is a sign of consolidation. It can lead to further continuation of the trend, or it can lead to a reversal of the trend that we do not have clarity right now. The other indicators are not suggesting any kind of sign of reversal, so might as well expect the trend to continue. So weekly chart, there is no sign, so it's safe to consider it to be a bullish view from the weekly time frame. Dropping down to the daily time frame, we have a sharp reversal pullback in yesterday's trade. And now the index has kind of managed to create a bit of a fractal high and a fractal low in a very short span of time, during which the momentum of the price behavior has kind of eased off. And overall trend is fine, positive, direction wise, not a problem. What we had based on Thursday's close on the Nifty chart was an oversold, but the momentum was not supportive, so we cannot categorize it as one of our thunder setups, but nevertheless it's trying its best not to fall. So from the daily time frame, it's safe to say cautiously bullish. The word cautiously is primarily because of the falling momentum, and bullish because the structure, the trend of the chart is still very much intact and positive. We've just had a bit of a range expansion recently, so we have to deal with it. Any kind of a trade we attempt, we should give ourselves some room. Too tight SLs in either direction, be it a long trade or a short trade, might get compromised. 125-minute time frame over here has just reversed up in both in terms of the trend and the momentum, which is helping the trend up. So far so good, no problem. Before we take a look at the sectoral charts, let me take you to RRG graph. First, I'm going to drop it down to 1 week. So these are RRG graphs on a base of the CNX 500 on the weekly time frame. I have first reduced it to 1 week, and I'm going to now sort it in terms of percentage change. And we see media. Now media, if you follow my work, you know that media is something I don't track that closely. It's just there. Healthcare was a big move last week. Auto was a pretty good move. Midcap, this is where we continuously saw pretty meaningful buying. Consumer durables, FMCG, IT. Okay, I can drag it further down to oil and gas and small cap. I can stop over here. Sectors which were, gainers more than 2.5%. Do you see something missing? Yes, I see the Bank Nifty missing. I see the CNX Fin missing. Not to forget the fact that 40% of the market's weightage actually comes from these two pockets. So going forward, if this new all-time high of the Nifty has to sustain, the Bank Nifty has to pull up its stocks and give us a bounce back. And who better than HDFC Bank? We're gonna drill down to these sectors and the stock. But first, quickly, let's do one thing. Let's drag our tail length to around 12 weeks. 12 weeks is around a quarter. I'll fit the RRG graphs. Okay, if you want some drama, I can quickly animate it for you, and you can see, though it will not going to make immediate sense to you the way they will animate, but you'll get a feeling that these graphs move naturally in a clockwise direction. All right, so 12 weeks RRG graphs plotted. I'm going to now sort it in terms of the tail. In terms of the tail, if I sort it, the first two sectors which are there in the leading quadrant are small cap and mid cap. I did mention right now that the small and mid cap, especially the mid caps, performed really well last week when the index decided to bounce back. So now let's take a look at the individual charts of the CNX small cap and mid cap and try and make sense. As I can see, TradingView is kind of reacting a bit slow. So this might take a bit of time at our end for the charts to open up. So please bear with me. Small cap. Okay-ish weekly chart. Now, direction-wise, momentum-wise, I cannot complain. It's fairly okay. We've got a red HGB followed by a sell-off last week and then a pretty sharp bounce back. Structurally, direction-wise, it's positive. There's no second thoughts about it. Yes, I can see a bit of a intermediate divergences, structural divergences on the weekly time frame. That does not mean anything immediately. We need to be careful whether the daily time frame's momentum shift down here, will it lead to the price on the downside or not? This needs to be seen. This is an important factor for the week ahead or maybe 2 more weeks. If it doesn't, if the prices pick up, then this divergence is going to get negated. And for that, we need to keep an eye on the daily time frame. Direction wise, I do not have much clarity. We can see a range bound activity. Actually, it's forming a range during which the momentum has been down. It will be wrong to say bullish. It will be wrong to say bearish also. It's in a juncture where it has to take up some call, whether the trend will follow the drop over here or the trend will show more strength and reverse the underlying momentum of the chart. Let's stay cautiously bullish. Let's go with the trend. Let's stay cautiously bullish. If in the next few days this reverses, then this will kick in and we may have a slightly more meaningful fall. Too early to say that. As of now, cautiously bullish. Small cap is still away from its all-time high. Mid cap is almost there. Similar kind of a range expansion on the weekly time frame, almost touching the 1 standard deviation on our charts. Very nice trend, momentum, very nice. Again, on the daily time frame, a range bound activity. You can see this range very clearly on the 125-minute time frame. And then you have the momentum on the downside. So a bit of a choppiness from an intraday or a very short-term span of point of view will continue, but again cautiously bullish. Until and unless last day's lows are compromised, there's no particular reason to go bearish on this chart right now. What is interesting to note on the chart of CNX midcap is we noticed a slant playing out on the daily time frame. It's a pretty good looking slant, post which the momentum reversed. After that, we had the first leg of sell-off. Generally, if the correction is meaningful, the bounce back should be shallow. It should not be this deep. Now, this correction on the upside is pretty deep. It has taken the index back to the high. So probably we might be heading for a choppy market, maybe a broadening formation. I don't know. Whatever be it, whether it be it mainly on the upside or on the downside, we are definitely headed for some choppiness. So mid and small caps are primarily the 2 indices which are there in the leading quadrant. Coming to the improving quadrant, this is where I like it. Media is one which is showing some strength. I'm not going to drill down into that, but it's CNX IT which I really like. The CNX IT, as you can see, has been picking up the momentum of the relative strength for quite some time. And now it's in a sweet spot from where it can take up the leadership. Well, it has taken up a bit of leadership as we speak. The IT, the FMCG, and the consumer durables, I'll come into it because it has slipped to the weakening. So let's talk about IT and FMCG. Both of them are in the improving quadrant. And we have seen that in the recent last week, particularly, the IT and FMCG, especially FMCG, was rock solid. Even during the budget session, when the prices were selling off, we saw how beautiful the FMCG pack held on. It was completely untouched by that movement. So let's talk about CNX FMCG. Pretty strong weekly charts. Nothing to comment about that. Just ride the trend kind of a chart. Daily, exaggerated, extended, stretched by the look and feel of the consecutive Heikenashis. We can say that. Is there any particular sign of topping out here? I wouldn't say that. It's stretched, it's extended. So it might be a bit of out of breath and can consolidate. Is it a good time to buy? Of course not, because it has given you enough opportunities in the past to get on board. Now, not the best time. 125-minute time frame will start to offer you multiple series of what we call as structural divergences, but they're not leading to the price reversal. The divergences form, it gives a short 2-3 bar fall, but not enough at all. So you have to be careful as these formations happen, but bullish. There is no second thought about that. What about IT? IT will also give you a very good looking weekly chart. Nothing to, comment more about it. IT on the daily chart will also give you a pretty good looking move on the daily time frame also. And IT on the 125-minute time frame, nothing much we can comment about. So bullish chart. The fact that yes, it's a bit stretched, especially the weekly chart if you look at it. Probably it's not the best of time or price to go long. And so you can use some corrective moves, maybe from the 125-minute time frame or the daily time frame to get on, some fresh trades. One thing that I would like to share from the daily time frame is what I see on this particular daily chart is a prospective breakout. We have a breakout, right? Whenever I see a breakout from a previous highs and all, there's always a bit of, should consider it with a bit of pinch of salt that whether it will lead to a failure or not. And the best way to figure it out is I use Heikin-Ashi. You can use the candlesticks or the bar chart. Is if you have found a breakout, now that's not an opening high, so that's not a very good level. This is a very good level. This is a breakout. Breakouts do act as trap. And so the best thing is, will Monday IT fall and break below Friday's low or not? Max Monday and Tuesday. If that happens, the possibility of this a failure increases, the possibility of further downside increases. If you don't see any kind of a sign of breakout failure, stay on board. IT is still a pretty bullish chart. Now let's move on to the Bank Nifty and Fin. So the Bank Nifty and Fin, CNX Finance, are in a pretty good spot if you ask me. Both of them are in the improving quadrant. However, they are losing vertical length, which means that the momentum of the relative strength is losing. They should pick up. They should ideally go towards the leading and not waste time in this area. Ideally, they should move to the leading. By the way, by leading, it doesn't mean that it has to go up. If a sector is leading the CNX 500, then both of them may be falling. The sector is falling less. So do not misunderstand that finance and Bank Nifty should be leading means it should be. The only possibility is it has to gain. No, it can fall also, but it's falling less than the market. So in this case, leading is relative strength in terms of relative strength. Now this is going to be a very, very important chart going forward for the next week. I feel so. Bank Nifty. Now, Bank Nifty is weekly. I will not complain anything. It's pretty fine. Structurally beautiful uptrend. Momentum was stretched. What it needed was a little bit of cool off. The cool off has been a little more than what other sectors have given. So it's come off a bit. Daily chart has got synced on the downside. Daily chart is not looking that great, but the weekly is fine. So we should expect some supports coming in soon. Maybe close to that psychological 50k mark, round about there. Maybe we should find some support. As I said, daily is not that great, but considering if I add daily and the weekly, then you can mark these erstwhile breakout levels and keep an eye whether these levels will hold for a bounce back or not. From a short-term point of view, this zone is not a bad one to keep an eye whether we get a bounce back from this area. And in this case, HDFC Bank, which is oversold and trying not to fall, should act as play an important role from here on. 125-minute time frame has had an extended fall and it's trying to reverse the trend. It's not a bullish chart. The weekly is bullish, the daily is bearish. So now it's a call to see whether the weekly supports hold and we get a bounce back or not. This is crucial for the overall markets because these guys enjoy the maximum weightage. And in the recent past, whenever we have seen that other sectors are a bit stretched, the Bank Nifty has definitely supported. CNX Finance will also give you similar kind of a reading. So there you go. We've got a green HAGB, as we call it, in a synced situation. So this is a make or break move for the finance, whether it will break below the low or move above the high for a further upside. Considering the weekly structures are pretty positive, one should not be overly bearish. Even if you're looking to short a few finance stock here and there, I would suggest not to hold on to these shorts for an extended span of time. Do not try to trend follow shorts in this market. If you're looking for shorts, hit and run kind of trades, take the short trade, gives a move, take it quickly, or else it will go away. Right? So finance and Bank Nifty, we're going to keep a close look at it. Now coming to the weakening quadrant. Now this is where if the RRG graphs information and the charts analysis kind of merges, confluences, this is where we can get a trend reversal. This is where we can get a nice directional move. Auto, realty, metal and consumer durables. Auto and realty will be really interesting because auto used to be in the leading quadrant and now it's losing vertically down. So it's losing relative strength, the momentum of relative strength. Realty, on the other hand, after giving a bounce back, is again losing some vertical length. So realty and auto both seems to be losing momentum strength. Is this true with their price behavior? Let's take a look at CNX Auto. One of the finest chart that you can see on the weekly time frame. Fantastic. Big move coming in yesterday, almost 2.5%, giving back, taking the stock or the sector back to a life high. Now the loss of relative strength that you saw on the RRG graph is primarily because of the multi-week consolidation. Because for the last, say, 4 to 5 weeks, the sector per se has not done anything and kind of slowed down. That's why the relative strengths have kind of cooled off. Okay. Trend positive. You don't need anyone to tell you that. Very, very early sign of M1 slowing down. Our M1 calculates the first degree momentum of the chart. That does not mean it's going to come down. It has created a big outside bar. So last week's range is important. Especially from a downside point of view, last week's range is important. View, of course, positive. I'm going to add a cautiously positive view on the CNX Auto. Again, because whenever I see the trend up but the momentum not, it's better to be cautiously bullish than outright bullish. So auto is fairly okay, not a problem. The other one was realty. Let's take a look at the weekly chart of realty. Over here also you will see a multi-week kind of slowdown. But in this case, where auto bounced back from here, realty has actually opened up on the downside. And what we have and what we call is a first degree sink on the daily time frame on the downside. Now, after yesterday's close, the realty index is offering us a pullback short. You don't need me to explain this. You know the rules. This is a pullback short. It has momentum support from the weekly charts. It does not have a structural support from the weekly chart. So it can be a cheeky short-term short trade. So keep an eye on DLF, Oberoi Realty, Godrej Properties. These are the ones which you'll find them in the FNO. This is a short trade, right? Whether there isn't any kind of an opportunity or not. The only thing is your stop loss will land up to be a slightly higher, probably close to these breakout levels. So realty is offering. You can mark it down, keep it on your watch list, look for some weakness in the realty pattern. In the weakening quadrant, we have metals and consumer durables. Now metal is very clean. The behavior of RRG graph is very clean. When it was outperforming, it has lost its vertical height. And if you take a look at the CNX metal chart also, it's kind of corroborates really well with the weakness on the RRG graph. Similar story. If you take a look at the daily chart, things started to deteriorate long time back. trend did not, and then it did. I think this is the place where we went with few short trades. All right, no problem. Weekly charts are still okay in terms of direction. Weekly charts momentum is not good. So it's a very important juncture for the CNX Metal weekly chart. Whether the whole thing will come down further down and give us a more meaningful correction or not. We don't have clarity on that. What we have clarity is after this kind of a sharp sell-off, the 125-minute time frame is improving. It should give us a short-term bounce back. We did see a 3% bounce back. Short coverings also fueled it. So maybe a little bit of a more bounce back, and will it face resistances up ahead? If it faces that supply up ahead, then we might get another leg on the downside. So I don't think CNX Metal is to be looked upon as a short trade next week. Long trades, you will be playing the pullback, so you better play it from lower time frames, not the daily time frame. So I would say wait and watch. The best case will be a shallow pullback, and if it doesn't sustain, the next leg on the downside. If the pullback is meaningful enough, then we will start to get some long trades. So I would keep metals on the side and kind of wait and watch. The other one is consumer durables. Now consumer durables and FMCG stocks, they were doing pretty good. Consumer durables, unlike the FMCG, which was rock solid, recently did go through a bit of a sharp sell-off and equally sharp bounce back, which has created a big outside bar on the weekly chart. Weekly trend is fine, momentum is fine, no problem. It's just that, if you zoom into the weekly chart as well as the daily chart, you will notice a broadening formation. Yeah. Now on the daily chart, it's something like this. The weekly is much more because you've got, what you have is higher highs and lower lows. Difficult times. Upside breakout fails, downside breakdown fails, and so it goes and takes the shape of a broadening formation, which can later take the form of a diamond and then eventually break out on the upside because the trend is up. So I don't know, whichever way it wants to break out or break down, that time will tell us and price will confirm. Whatever you do in this pack, keep it short and sweet. Do not try to trend follow here. You will face volatility, that's for sure. And do not trade breakouts, because this is the zone where breakouts will fail. And finally, the last two sectors, which is oil and gas and healthcare. Now both this pack has been coming off from the leading to the weakening and now entered the lagging. However, the healthcare chart will not corroborate with the RRG behavior of healthcare. The healthcare, CNX healthcare RRG is suggesting that it's in the lagging. But if you take a look at the healthcare or the pharma pack, CNX pharma, you will not see a very weak chart. On the other hand, you'll see a pretty strong chart. The reason of that weakness is because it went through a multi-week slowdown. So it's yet to catch up. In terms of price, strong trend, momentum fine, strong trend, momentum fine. It has given us multiple pullbacks, which has led to upsides. So stay bullish. The only thing is the pack has not been bullish across the board. There has been occasional bouts of sell-offs. So you need to be careful on that. Sun Pharma especially has given us a good move. So overall CNX Pharma Healthcare is bullish. The other one is oil and gas. Now this is where OMCs played a big role. I have the entire oil and gas and power and everything combined within the CNX Energy, which essentially, again, I would say is playing out a wonderful slant on the weekly. It is going up, but it's not the best of going ups. You can clearly see on the daily time frame, very choppy, very choppy. Be it the election results, if I even discount this, there's the budget and all. It's not an easy sector to track or trade because of the frequent changes, which means that if you trade anything from here, you cannot sit with a degree of complacency and expect, okay, I'm going to ride the trend for a week or two or a month or two. I don't think it's going to happen because it's oscillating, it's choppy. View bullish, cautiously bullish, as you can clearly see this. Pretty sell-off that came recently, equally sharp, pretty bounce back that has come in the last 2 days. So you need to time. You need to be really good in the timing of not only entry but also exit, or else these kind of markets we will not be able to generate profits. I think in these kind of markets the best thing is to be brutally crude, agile and crude, that you get some profits, get out of it rather than holding on to it. Maybe on the higher time frames, cash market, it's a different story. But from a short-term trader's point of view, this is where you have to hit and quickly get out, or else they will just go away. You will see the profits getting into losses very, very soon. So that's the CNX energy. I think the view that we have kind of figured out for the next week is, may whatever come the upsides or on the downsides, we are headed for some choppiness. We have few sectoral charts which have created outside bars last week. So the range breakout of that outside bar is important. We did find a short setup on the reality. Now that's not a big deal. But for me, the big deal is the Bank Nifty and the CNX Finance, especially the Bank Nifty, and especially few charts like HDFC Bank and State Bank. So let's see how it plays out next week. Now that's my call on the Nifty and the sectors. Let's quickly move ahead. I'm going to check your doubts and questions, and then we will find some opportunities for next week.